Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today, we'll be talking about the top events that are currently moving the charts. To begin with, as the title of the session suggests, the Australian dollar made a very strong rally this morning after their central bank, that's the Reserve Bank of Australia, decided to hike interest rates by 25 basis points to 3.85%. So what was surprising was not the fact that they hiked interest rates. The market was basically expecting it. There was a 75% chance. The surprising thing is that among the major central banks around the world, the only central bank that was on a path of hiking interest rates was the Bank of Japan. The rest, especially the Western central banks, have been on a path downwards. So the ECB, or the European Central Bank, has been cutting rates, the Bank of England cutting, the Swiss National Bank cutting, Bank of Canada, the Federal Reserve Bank of the US all have been cutting rates. The Reserve Bank of New Zealand has also been cutting, but for the first time, we have seen a major central bank go for a rate hike, which marks a key trend in central bank policy. In this case, now they have begun hiking interest rates, which means that they are now tightening policy. So once you join in, kindly say hi in the live comment section. Also, remember that this session does not constitute any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence and practice proper risk management. So I can already see out of traders already joined. I can see Smith FX in the house. Good morning, Cliff Mogire and Derry. Thank you for joining. Samuel is already in the house. Who am I? Odiwa Opar, Simon Gitonga, Knight 88, Ali Mokevi, good morning and thank you for joining this session. So remember, once you join this session, to share. If you have other friends and traders who are already trading, make sure they join the session. Let's discuss the markets together. So let's start with this particular update I had made on my personal X account. If you don't follow me, I'm Rufus KE on X. So I do a lot of market updates on what's trending, what's happening, where are the opportunities. So it might be a good point in following so that you can get timely updates. So on this particular tab, you can already see the post I just made a few minutes ago. One is that there is no NFP this week. 2, RBA hikes rates. 3, AMD, Uber, Alphabet, and Amazon are reporting earnings this week. 4, is Kenya Pipeline a good opportunity to buy into the IPO? And now we get to dive into it. So first of all, what is this about having no NFP this week? So for those who are new, NFP is short for non-farm payrolls. This is the official data that shows the status of the job market in the United States. And the job market is very important, mainly because the Federal Reserve Bank of the US has a dual mandate. On one, to maintain stable prices, where it targets to make sure that inflation is around 2%, that's the target. And the other mandate is to maintain full employment. So these two data points influence monetary policy, where on one side, if the job market is worsening, the Fed tends to ease policy, meaning that they cut interest rates in order to promote more job creation. So on the other hand, if let's say inflation is on the rise, they will hike interest rates in order to control inflation and reduce it. On the other hand, if inflation is dropping way below the target, then in that case, they consider doing the opposite. So, so far, the inflation has not been a big issue in the US economy, but then the job market has been seeing a lot of stress, and this has forced the Fed to cut interest rates several times last year. And in the first meeting of the year, they did not cut interest rates. Observing this data point will help the Fed decide the next decision on the next meeting. So it's usually a very important data point which causes a lot of volatility in the market. So this data point comes every first Friday of the month. So the first Friday of the month of February is this Friday. That should be on the 6th of February. But since there is a current government shutdown, and a government shutdown means that all non-essential staff or employees of the US government are sent on temporary leave before the Congress agrees on a budget. And once they agree, then they resume their job. So the guys who work at the statistics department or Department of Labor Statistics are currently on leave, so they will not be publishing the job market data for January, and that report will come in later in the year. So that means that this Friday we will not be having the official non-farm payrolls. So second, Reserve Bank of Australia decided to hike interest rates as of this morning. So as you can see from the economic calendar, they moved interest rates from 3.6% to 3.85%. So that's a 25 basis point rate hike. And whenever you see a rate hike, it's usually in relation to a strengthening of the currency. So a higher increase in interest rates by the Reserve Bank of Australia means that we expect the Australian dollar to be strengthening. So that's where it's at for Australian dollar traders. And if you look at the finviz.com website, where you're able to see the relative performance of currencies against the USD, and this is mostly the major currencies, you'll notice that the dollar has been the weakest currency as of this morning, whereas the Australian dollar has been the biggest gainer, up 1.33% against the USD. So the New Zealand dollar tends to be strongly correlated to the Australian dollar, so it also gained against the dollar by 0.89%, and then the rest of the currencies have these small gains against the USD. So clearly, if you're looking for the strongest currency of the day, that would most definitely be the Australian dollar, which is doing really well against the USD. New Zealand dollar being second. So if you're looking for pairings, strong currency versus a weak one, then the strong currencies to go for would be the Australian dollar and New Zealand dollar, and the weakest currencies would be the US dollar and the Japanese yen. JPY is slightly up against the USD by 0.10%. So on the Bitcoin side, we know that year to date it's down 10.22%, but then as per today's performance, it's slightly down by 0.24%. And of course, we'll be covering the other charts later in the presentation. So on the stock market side, we have had quite a performance. So since the year started, some stocks have really made some good gains. So if you go to the year-to-date performance, just give me a sec. You'd notice big companies like Microsoft are down 12%, Oracle down 17%, Palantir down 16%. But then there are other stocks that are doing really well. For instance, Amazon is up 5%, Google 9%. Meta, or the mother company to Facebook, is up 7%. Walmart is up 11%, or Costco is up 12%. Philip Morris International up 12%, and so on. So clearly, a good number of stocks have been making some good gains with a specific focus on the chip industry, that is the microchips. You'll notice that there is some stocks that have really done well. So while NVIDIA took a step back, it's down 0.48%. Other stocks in the sector are doing well. Broadcom is down 4%, but then if you look at Micron, it's up 53%, AMD 14%, Texas Instruments is up 29%, Intel Corporation 32%, and of course, Monolithic is up 29%. So other stocks in the sector of microchips, you look at Applied Materials is up 27%, Lam Research Group 38%, KLA Corp 16%. We have Teradyne up 28%, and of course, QDT Electronics up 23%. So those sectors are very interesting, and of course, we have specific stocks that have been doing really well. So if you have been following this series, and we know that these sessions happen every day, Monday to Friday, there's quite a number of stocks that have been making the news. One of them being SanDisk Corporation. There is a shortage of memory, that is computer memory, and companies that produce and distribute computer memory chips are doing really well. So I did some analysis some time back, that was on the 7th of January, and this stock was only up 40%. So yesterday, it managed to gain by over 15%, and its year-to-date performance is at 141%. So definitely a stock worth looking at. So other companies are producing memory chips include Western Digital, and Western Digital is also doing really well, having gained by 43.91% since the year started. Remember, that's just a period of 1 month, and yesterday it was up 7.95%. So definitely a stock worth looking at. So looking at other stocks that are expected to be reporting earnings this week, there's quite a good number. So it's a very busy week on the earnings side. So we're looking at some of the key highlights. So as you can see, the list is pretty long. So looking at yesterday, we had Walt Disney reporting earnings. So among other companies that were reporting yesterday, we'll be looking at some key highlights. One, NXP Semiconductors, was looking at Palantir Technologies, Simon Properties, and Teradyne. Then today, we're looking at ADM, MTech, ATI. Among the highlights would be Ferrari, Fubo TV, Galaxy Digital, and Mark in the medical sector. There is Pepsi, Pfizer, Shopify, among many other stocks. So in after market close, we'll be seeing AMD reporting earnings. AMD is a quite big tech company in the microchip industry. So we'll be watching those earnings later today. That is after market close, which means 11 p.m. Kenyan time. Electronic Arts in the gaming industry, among many other stocks. So that being mentioned, I believe now we can skip to some of the other interesting stuff happening in the markets. So I'll be starting with an article that was updated 2 hours ago on Reuters. So gold steadies, stocks bounce, and rate hike hoists AUD dollar. So it's still the same kind of highlights that we've been doing for the past couple of minutes. So RBA hiking rates by 3.85%. India trade deal boosts stocks and rupee. So these are a trade deal between the US, Trump, and India. And the trade deal is bringing back confidence in the markets. The Nikkei, the Japanese benchmark stock market index, is doing really well. Yen and bonds squeezed ahead of Japan election. So gold and Asian stocks were on the rebound on Tuesday. Just a sec. As trade took a calmer tone after wild swings in metals markets, and a deal to cut US tariffs on India helped the mood of the Australian dollar rose after an interest rate hike. Australia's central bank joined Japan as the only developed world economy to tighten policy, saying above target inflation and a tight labor market justified a unanimous decision to lift the cash rate 25 basis points to 3.85%. So markets had mostly anticipated the move, though are now rushing to rise in a follow-up in May, which was enough to push the AUD about 1% higher against the US dollar. So India's European stocks cheered an announcement by US President Donald Trump that tariffs on Indian goods would be cut from 50% to 18% in return for New Delhi halting Russian oil purchases and lowering trade barriers. So other than that, metals have stabilized. Gold is up currently over 5%, not 3%, and silver almost 10%. So gold, silver stocks and the dollar have all whipsawed since Trump's nomination of Kevin Walsh to lead the Federal Reserve sent metal prices tumbling. Walsh is seen shrinking the Fed's balance sheet, pushing up bond yields, which is negative for precious metals that pay no income. However, the dive in prices on Friday and on Monday went beyond fundamentals and was a wipeout for leveraged positions and sent tremors through global commodity and stock markets as traders sold other assets to bail out losing bets. Looking ahead, Wall Street earnings are in the frame with chip maker AMD and server equipment company Supermicro Computer due to report after market. So on the Takaichi trade, currency markets were finding a level after last week's sharp spike lower in the dollar. The euro bought 1.1809 in the Asia session, off highs hit above 1.2 late in January. The yen traded at 155.41 per dollar and has retraced about half the gains it made on the greenback that followed talk of possible joint US-Japan intervention to boost the yen. According to polls, Prime Minister Sanae Takaichi's Liberal Democratic Party heading for a landslide victory at the weekend's election, putting pressure on bonds and the yen as it would hand a mandate to her agenda for fiscal loosening. So Japan's finance minister, Sasuke Katayama, on Tuesday was downplaying weekend remarks from Takaichi, highlighting benefits of a weekend at odds with authorities' efforts to support it. So looking at other key highlights in the markets, Elon Musk says SpaceX acquires XAI ahead of mega IPO. So clearly we'll be expecting one of the biggest IPOs in the world to be SpaceX. So it will be very interesting. So as much as we talk about IPOs in the Nairobi Securities Exchange with a key focus on Kenya Pipeline Company, the world it will be mostly focused on the biggest IPO of their lives, which would be most likely SpaceX. So speaking about the Kenya Pipeline Company, we know that there is still a window to get into the IPO early. This is happening between now and the, I believe, 19th of February. So the window is still open. So you're able to get a CDSC account and buy into the IPO. And hopefully, if the buzz is strong and there is a lot of demand, then the shares could rise within a short period. So in my opinion, I don't see anything wrong with the Kenya Pipeline Company books. The company doesn't have as much debt, and with an annual performance where it has been making over 10 billion shillings per year, and this is coming in from around 36, an average of around 36 billion revenue. And as a company that has been consistently profitable over the last 10 years, then it still strikes as a good potential entry point. So with shares trading at 9 shillings at the IPO, 9 shillings per share, minimum 100 shares, so that would be like 900 more. It might be a good starting point if you are interested in getting into the NXE. So, however, this is not investment advice. Do your own research, and all investments carry risk. So, other than that, looking at other highlights in the markets, gold bounces with silver as deep buyers crowd in following slump. So after the big sell-off where gold was down over 21%, silver over 30%, we have seen the market rebound quite nicely since yesterday. So of course, we'll be expecting more recovery after the panic selling that happened last week. So most likely there will be more opportunities on the buy side compared to the sell side. So gold advanced along silver as deep buyers crowded into precious metals following an abrupt unwinding of a record-breaking rally. Spot gold climbed almost 6% to top 4,900 an ounce after falling 4.8% in the previous session to extend a slump on Friday that was steepest in more than a decade. Silver rose more than 9%, taking it back to $87 an ounce as a risk-on tone returned to wider markets and the US dollar fell. So also among other stocks to be very concerned about, given the slump we have seen in the crypto industry, Robinhood Markets, which is a financial markets broker listed on the Nasdaq, has seen a lot of sales, and year to date it's down 21.96%. In the last 1 month, 27.04%. And yesterday, as per the market close, the stock dropped by 9.62%. So this is very interesting, considering that this has been one of the top performers For instance, in the last 1 year, it was up 73%, and in the last 5 years, since the listing in 2021, the stock is still up 155.79%. So this sharp drop that we are seeing here can be taken as a dip, and as I always say, a dip is a gift. So it might be approaching some level or form of buy territory. So on the economic calendar front for the day, we don't have many major events. So after the RBA cash rate hike this morning, fast forward, we'll be looking at 2 speeches from Fed members, FOMC member Bakin at 4 p.m. and then FOMC member Bauman at 5:40 p.m. Then the only data point will be the jobs job openings, and this should be around 5 p.m. And we are expecting these to have increased to 7.23 million, up from 7.15 million in the prior month. So an increase in job openings means that the job market is healing and getting healthier. And as a result, a healthy job market, as mentioned earlier in the presentation, means that the Fed will not be in a hurry to cut interest rates, which tends to be negative for the dollar. Positive for the dollar. So an increase in job openings should be positive for the dollar. And of course, if the job market is worsening, let's say there's a drop, then that should be negative for the dollar. So fast forward to tomorrow morning, before the next market snapshot episode, I will be having job data from New Zealand. Remember, job market data tends to be positively correlated with the currency. So unemployment rate is seen to remain at 5.3%. And then the employment change quarter over quarter, we're expecting a 0.3% increase compared to a 0% change in the prior reading. So in this case, if we see an employment change that is much higher than the expected 0.3%, then we should be expecting to see further strengthening of the New Zealand dollar. So later on, we'll see the CPI flash estimate for the Eurozone. And of course, we're expecting inflation to have reduced to 1.7% for the headline inflation, and core inflation to have remained around 2.3%. Then we get the ADP non-farm employment change, where we're expecting that the private sector in the US created 46,000 jobs in the month of January, which would be an increase from 41K in the prior reading. So we also be looking at the ISM services PMI, which are expected to have slightly declined to 53.5, down from 54.4, but still in the expansion territory. Before we focus on crude oil inventories at 6:30 p.m., given that this is the OPEC week. So if you look at Monday, OPEC and JMC meetings, so this is the oil producing and exporting countries usual meeting where they decide how to respond to global demand of oil. Normally, for the last couple of months, I would say in the last 1 year, the OPEC have been expanding output, and this tends to have the negative effect on prices. So as much as they keep on increasing prices, we tend to see, as much as they keep on expanding production, we keep on seeing prices moving further back downwards. So that may explain the weaknesses we have been seeing in the oil markets. So I believe those are the highlights for the day. Don't know if I missed anything. I already mentioned about Western Digital, which outlines 40% year-over-year Q3 revenue growth, target as AI demand accelerates. This was from an article on MSN. So I'll be sharing this with you in the comment section so that you can take a deeper dive and look at what's happening in the computer memory industry and the top leading stocks such as Western Digital and SanDisk. So looking at the comment section, you can see quite a good number of questions keep coming up. So I'll be responding to those questions as we proceed with the presentation. So this is the MetaTrader 5 trading application, the app that we use for trading on a desktop or a laptop computer. If you prefer trading using a smartphone, then check out the Equity Trader by FXPesa. I'll be writing that down in the comment section. It is available on both App Store and Play Store, so you can download, install, sign up to the account, and then begin practicing and learning to trade. So you can see there's already a comment on what's happening with Bitcoin. So Bitcoin seems to be really tanking and taking out the kilos that were long-term supports. Yeah, that seems to be the issue, and it seems like Bitcoin is entering some form of bear market. Remember, when we are talking about a bear market, if an asset is down, let's say 25% from its top, we consider that as a bear market. And if it's down over 10%, but not beyond 25%, we call that a correction. So the recent drop from the all-time high that we saw in the month of October dropped 23.81%, very, very close to entering a bear market. So we had a key level support. Notice that this exact price, which happened to be the bottom in the month of April last year, when there was a panic due to Trump's tariffs, and also the high that we had seen on the month of March 2024 is coinciding with the bottom that we just got the other day. In fact, that was yesterday. So we got a very nice bounce from here. So perhaps we'll be seeing some more bullish momentum before price heads lower. So we don't have any strong momentum to suggest a recovery. But then looking at the last 3 weeks and how price has dropped, there's a good chance that we could be seeing some nice bounce from these levels. Of course, Bitcoin dropping to around $74,590 per Bitcoin. That was seen as a bargain entry. And of course, some investors are capitalizing on that. So the main thing in the markets today is metals rebounding. And you can already see that after yesterday's sharp drop, that was the open of the week, the market managed to recover and close up almost 6% from the day's low, but then still significantly lower than Friday's close. Friday's close was here, so yesterday's close was down 4.55%. On the other hand, at the market open today, compared to the current price, Bitcoin is up 5.68%. Of course, we expect not Bitcoin, but gold. We expect to see continued recovery given the big sell-off that we saw last week. So yes, today we are up over 5%, but then if you compare the swing from 3 days ago, we had a drop of 21%. So this was Thursday, followed by a sharp sell-off on Friday, and then on Monday even further. So 21% drop, and now the market is recovering. We're almost recovering 50% of the prior move. So more bullish momentum is expected in gold. And of course, if you have to work with targets, then I suggest we start looking at some of these levels here for the day. And this is around 49.91, perhaps even 5K towards the end of the day. So silver was the most affected last week with a big sell-off extending to 41.60%. And that's a 2-day sell-off, 3-day sell-off, Thursday, Friday, and Monday. So 41% was such a panic trading momentum. And now that we are seeing recovery after yesterday's bearish momentum was countered by buyers pushing prices higher. So now today we are almost breaking yesterday's high, which means that we would likely see an extension of the bullish momentum towards the levels around $95.337 per ounce. So on the US stock market side, we are also seeing a strong recovery. So after the big sell-off for the Nasdaq, it was 4.39%. We have seen a very strong bounce that has completely recovered from yesterday's sell-off and today's early morning sell-off. Yesterday's sell-off and Friday's sell-off. And we are on course to a path where the market now gets to the upper band, which was towards the high of last week. So I expect to see more momentum towards $26,063 per share, given that we have been in this consolidation for a while, and now the break seems to be happening on the upper side. So as for the US 30 or the Dow Jones, we are seeing quite a range. I would say for the last 4 weeks, this has been the momentum. Direction is mostly sideways, so it's not a market that has been trending. But now we are currently on a swing from the lower side of the range towards the upper side, and the resistance has been consistently around $49,607 per share. So expect this momentum to extend to this area here. So as for the SP 500, we're also seeing the same stuff. So from the 4-hour time frame, you can see that we just bounced from the lower side, looking to test last week's high. So last week's high is not very far off, so around $7,013 per share. So that is expected to be retested at least by today. On other stock market indices, the Hang Seng Index made quite a pullback after the strong rally last week and sharp drop erasing all the gains. So as we started this week, notice how yesterday was a sharp drop and then a recovery, and then today a very quick liquidity grab. For those who don't know about liquidity grab, you know that people who bought here at this support yesterday, and the market started going up, if their stop loss was just here, then it was hit in the very first hour of trading, the market bounced immediately, which means that we are more likely to move towards the high of day compared to the low of day. So we should be looking at the market looking to push towards this area here. So on the UK 100, we just hit a new all-time high. So this all-time high is pushing even higher. So from the daily time frame, this is how it looks like. From the 4-hour time frame, this was the consolidation that lasted 2 weeks. So yes, there was a lot of volatility towards the break last week. Then yesterday there was a sharp drop, which represented some form of forced breakout, and then an eventual reversal, which pumped even higher. And today we are testing yesterday's high. So looking at this and how the market topped here, and now that the market is pushing above it, it's more likely that we will see a continuation of the current trend. So in such a market, such as the UK 100 index, where there is no candlesticks on the left, then the dip is a gift. So any form of pullbacks can be taken as a potential entry points for further bullish momentum. So Nikkei 225 index, after ranging for 3 weeks, I remember last week we were talking about this sharp drop here on Thursday. Then on Friday, we saw the market go back up. Then yesterday, a sharp drop to the same lower trend line, and then a pump which broke the upper trend line and moved even higher. So normally in such a trade, you would expect to target the previous high. But now that we've broken above the previous high, usually we expect the market to retest that high. So breakout, retest, continuation. So if you go to a smaller time frame, in this case the 15 minutes time frame, this was the breakout. Here we are looking at a retest, and now the next expectation is a move higher. And higher doesn't mean to the high of day; it means even higher than the current price. So it's usually a book pattern that keeps playing out, not every time, but most of the times. So dollar yen is finally closing this gap we had seen when the dollar was in panic mode. And here you can see how the market bounced pretty well. So from the 1 hour time frame, it has been quite a struggle to close this gap, but finally we are getting there. So notice how the gap started here, market dropped here, and now we got to that high yesterday. And now as we look to breach this particular resistance, we should be looking at the origin of this sell-off move. So the origin of this sell-off move was 158.132. So we should be expecting to see the market pushing towards this area once we manage to breach above this area here. So for the dollar trading against the Swiss franc, you notice that it made some serious recovery, closed the gap. The gap was right here. So we talked about the market retesting here and eventually moving to close the gap. The gap has been closed, and we know that the Swiss franc is still a pretty strong currency. So there's still more room for upside momentum. You go to the daily time frame, you will notice that we have been trading in this sideways momentum, and this sideways momentum lasted several months. So if I was to mark this area here, and then I mark this area here, then you can see that for 7 months, I would say 1, 2, 3, 4, 5, 6, 7. And now the 8th month, we finally got a break towards the lower side, and now the market is pushing to retest that area here. So that area hasn't yet been retested yet. So at some point, I expect the market to really push harder and get to around 0.7839. So for Euro USD, after the strong 2-week rally against the dollar, it erased some of those gains towards the end of last week, and this week it seems like the dollar is recovering against the euro. So despite today the euro being pretty bullish against the dollar, at some point we should be seeing some weakness and a retest of the prior low. So the prior low is the low that we saw yesterday. So from the H1 chart, there seems to be still some form of momentum. Here, in this case, the market looking to retest this area here. So low of yesterday could be a likely target for Euro USD traders, similar to what we are seeing with the pound. So even after bouncing pretty strong as of this morning, you can already see some weaknesses coming in. So here you can see sellers are beginning to enter this market. And this is after hitting this area, which seems to be a resistance around yesterday's high. So we could be seeing the market now changing direction and moving towards yesterday's low. So AUD USD, the king of the currencies as per today, managed to break a key level resistance, and then now we are seeing some form of pullback. So this was the reaction after the rate hike this morning. So we expect this momentum to continue, and of course we have a target to achieve, which would be the high that we saw last week. So of course this is expected to continue moving higher towards 0.70922. So New Zealand USD is facing a key level test. This is a particular trend line that has been respected several other times within the last 3 days or 3 trading sessions. So the market is retesting that area, and if it finds resistance, then we could be seeing a sharp drop, or we break above that area and head towards the previous high. So it's one of those markets where we say it's a wait and see. Are we going to see a break or a bounce? And of course, given the trend we are seeing also with the Australian dollar, a break would be a likely outcome, and we push through to the prior high around 0.60927. So for the dollar trading against the Canadian dollar, we are also at a key decision point. So notice how this was the trend line working as resistance. Having been broken yesterday in the market pulling back, we could be seeing the dollar continuing with a bounce. So rather than bouncing from here, now we'll be expecting a bounce from around 1.36413 headed on to the next resistance area, and the next resistance area is around 1.37382. So on European equity indices, we are seeing the DAX make a very impressive recovery. So we remember about 2 weeks ago when Trump was threatening to implement tariffs on European countries, and the market was in a panic mode, so we had a very sharp sell-off. And now, after promising not to implement tariffs on these economies, we've seen their stock markets recover, with the UK 100 hitting new all-time highs. So the German DAX is also making a very impressive recovery. The EU 50 also making a very impressive recovery and breaking into a new all-time high. So of course, we will be expecting more momentum. So we just broke into a new all-time high within the last 1 hour. And of course, sometimes after such a breakout, you can see the market retesting and making a continuation. But all the more, the idea is to be looking for bullish trades rather than bearish trades. So for the French 40, it's a similar thing, a very strong bounce. So if you look at the last 15 minutes, the market had opened with a gap. So there was a very sharp move to cross the gap. So at some point, we should be expecting to see a continuation high. So that's it for the day. Swiss stock market index also making a recovery. Netherlands stock market index also making a strong bullish momentum. From the H1 chart, you can see the sharp rally yesterday, and this could extend today. And last 3, if you look at the high grade copper futures, after the big sell-off last week, which lasted about 15.54%, we've already recovered, and the dip is now about 7%. More bullish momentum is expected. On the platinum side, we're also seeing the same. So the sell-off happened last week. Notice how the sell-off lasted about 32.93%. And as of this morning, compared to yesterday, we are seeing much more bullish momentum. Notice that yesterday there was a sharp drop and then recovery, but today is more bullish momentum. So we expect to see further upside potential as the market looks to clear the big panic selling that happened last week. So that being said, I believe that's the end of my presentation today. And there's a lot more happening in the market, so we'll continue updating you. For those of you who are on the Bullish Banter Telegram channel, make sure to raise more questions there, and we'll be responding as we go. And if you haven't joined the Bullish Manta Telegram community, we'll be sharing a link with you in the comment section. Join us. Let's continue talking and sharing more information about the markets. So the Bullish Banter podcast is a podcast that I host with Jesse Ogola. And so far we are celebrating having hit over 100 episodes since we started over 3 years ago. And we appreciate all the support you have given us. And in the most recent episode, we interviewed a trader called Eric Mutule. So make sure to check it out. It's live on FXPesa YouTube as well as on all other podcast platforms. Make sure to check it out, share, give us your feedback. So that's all from my side for today. So I'll be checking if there's any questions I may have missed. You can see Masikatana is in the house. Robert Kavale, thank you guys for joining. So good question from Knight. What does it mean when CME hikes margins and how does it affect the market? So the margin requirement is a function of leverage. So if traders have been highly leveraged, especially in the commodities markets, if they hike margins, they discourage the leverage that is being used in markets. So this tends to slow down volatility. So the volatility we are seeing, like silver dropping by 30% in a day, will be much less if people have less volatility. So I believe we should be expecting a slow, consistent recovery rather than those erratic moves that were happening last week. Seeing a stock rallying by, seeing a commodity dropping by 10%, gaining by 10%. Those are not usual normal market moves. So I believe there is enough resources to check out on how to open a CDSC account. But the easiest way is to go to a local bank, ask them how to do it. They have a department for that. Then they will guide you on the rest. All you need is passport photos, your ID or passport, and a copy of your KRA PIN certificate. Once you get there, they will guide you on how to create a CDSC trading account. Then from there, you'll be able to consider buying some NSE shares. So yes, there's no NFP coming this Friday because the BLS is on leave due to the current US government shutdown. So on one side, the Congress in the US already agreed on a budget, but it still has to be signed by the other house. That is almost 100% likely. It's only that they were on recess, so they should be resuming later this week, and that would reopen the US government. So that is it from my side. Thank you very much, everyone, and enjoy the rest of your day. For those who are wondering what kind of background I'm using today, Kenya Power decided to do that thingy, and I had to operate from a different office. So what happened to the metals on Thursday? I believe there was a lot of some form of manipulation with changing the leverage requirements or margin requirements, which led to out of panic selling. But now we are seeing the market resume normalcy. So on the de-escalating of US-Iran tensions amid a soft dollar with gold rally upside. So gold is on a path to recovery. The sell-off was overextended, and if you have ever heard of an oversold market, then that would be gold and silver, same as platinum and high-grade copper futures. So what we are witnessing from yesterday is the market resuming normalcy or getting back to mean. So that means we expect the bull run to continue today. So I believe I've answered all the questions in the comment section. Thank you very much, everyone, and happy trading day. Good morning, Kiama Muturi. Thank you for joining. Gibson Mwachala. Thank you guys for watching. So if you joined late, make sure to check the recording. It's available on Twitter. It's available on Facebook. It's available on YouTube. That is on the FXPesa channel. So in any case or any day where you are late and you miss out on a session, you can rewatch it later. That is it. Adios. Enjoy the rest of your trading day.